Welcome to the Experimentation podcast. I'm your host, Darius, and today I'm speaking with Neil Soni, a veteran in corporate innovation and author of the book Startup Goldmine. How are you today, Neil?
Very good. Thanks for having me on today.
Thanks for making the time to talk to me. So, Neil, I'll let you introduce yourself properly and in a little bit more detail, please.
Yeah, absolutely. So I've kind of had a dual career in the sense that I've been a founder of a couple different startups. One in education, one that's and both are marketplaces, but one in education, one actually in beer. And then I've also been head of growth at another education startup. So I've had quite a bit of experience as a startup founder and early employee. But at the same time, I also spent 3 years building the external innovation department at the Este Lauder companies, which is the parent company of Clinique and Este Lauder and Mac, Smashbox, and 40 other brands that you've probably heard of if you're in the beauty space. So because of that kind of dual experience, I got exposed very early to many of the issues that I think a lot of founders have probably experienced, which is when they're trying to work with a large company, Fortune 500 company, or maybe even a little smaller. There's almost a different language that those companies are speaking versus the language of startups. And so the book that I wrote, which you had mentioned in your intro there, the Startup Goldmine, is really a guide for founders and any other startup employee really, to better understand how they can work with large companies. So I try to pull back the curtain a bit for them and allow them to really understand what's going on behind the scenes over there and how they can use that information to close deals.
Right. Yeah. What I found about the book was really the reality of how things work and how people think. That was very interesting, which is very valuable for startups because, especially if you're a B2B startup, your life is going to depend on how well you connect with the corporations. That they can help, either way. Even if you're addressing like a smaller companies upfront, you still want to be able to address and speak with the larger companies. So the reality of the culture and how people think and the dynamics was very interesting in the book. I'll make sure to include a link in the notes. Now, so you worked at Este Lauder for 3 years.
Yep.
And so this is almost like a common theme. I've talked to several people, and even before I started this podcast, is the challenge of corporate innovation. It sounds great. We should do it. We need to do it. But it's an experiment that seems like it's not meeting the expectations some way or another. So we've got all these starts and stops and starts and stops. And so tell me more about what your experience is on that respect.
Yeah, so a lot of it is exactly what you said and very much the theme of this podcast. It's meant to be an experiment. Many times it's not actually an experiment, right? There's a lot of politics that go into it. And in my opinion, and I think, I'd imagine a lot of other people will probably share this, there is a true experiment has a chance of failure, right? I think it's, and you objectively have to allow it to fail. Or succeed, right? I think there's either one. Like you have to allow a true market condition, or you actually allow the marketplace, or if that's not what you're testing, actually allow the environment to judge success or failure. And I think what happens a lot of times in these corporate innovation projects, or even entire initiatives, like a whole department being started, it's kind of predetermined what the results are going to be or what the purpose is. And I think one of the things that's in the book is that the stated purpose is not necessarily what the actual purpose of these things is. So sometimes, and I don't want to say all large companies are doing this. Many companies, are actually, I think, doing an actual attempt at innovation. But in many companies, I think many other companies, the problem is the innovation groups are mostly there for optics. And that's obviously not what anybody internally will ever say. But oftentimes you will see that as the result. Whereas there are companies that, like a good one that I've had some experience with is ZX Ventures of Anheuser-Busch. And, they are in a lot of ways willing to disrupt their own business, which is refreshing.
Right.
Just simply because, they're a beer company. They've always been a beer company. People are saying there's threats from cannabis to the beer industry. There's threats from sparkling beverages or canned beverages that are not beer, as threats to the industry. And they've made some nice bets on whether it's accelerator type investments or seed round type investments into companies that are honestly directly competitive with them.
Right.
And we'll see. Maybe those will fail. Maybe those will succeed. But at least they're kind of willing to go outside the comfort zone a little bit.
Right.
At Este Lauder, I think the experience was very interesting because coming in when I joined, there was already an innovation group, like sort of an internal innovation group. But where they had brought me and a couple other folks in was specifically for external innovation. So the idea was more, there are needs that the company has, whether that's in marketing or in R&D or in supply chain or retail, and those needs cannot be met internally. How do we go outside the company and solve those? Whether that is relationships with startups, relationships with investors, relationships with universities, or even other large companies. So we kind of spanned all of those types of relationships. And the interesting thing was the first 6 months, like they did do it as an experiment in the sense that nobody had like long-term contracts, even full-time employment, right? Initially it was like, okay, we're going to bring 3 people in as contractors to do this. And, we'll kind of evaluate on a few different metrics to see how it's going. And the interesting thing, and this is a big difference between startups and large companies. I always had assumed that the metric would be revenue, right? Or profit. Okay. And a lot of times, the lag time from innovation effort to profit, the timeline might be too long, or too long to judge in a 6-month interval, right? And whereas all of my experience up to that point had been on the startup side. So, we're used to, in the startup side, saying, okay, on Monday, we want to test a new landing page, and the new landing page is up by Tuesday, right? And we can judge results by Wednesday. Maybe not Wednesday, but by Friday, we have some data, right?
Definitely by Friday. By Friday, yeah.
Right, exactly. So it was a very different type of environment from my perspective. And, personally, it took some time to kind of get used to that, type of environment.
Right. That's very interesting. Yeah. It's so the common theme, and I think I agree that, as you mentioned in the beginning, the common theme is like there's so much excitement when you want to start an innovation program, right? We all want to get we're going to do this, and we know it works and it's going to be great, and it usually comes from high in the corporate leadership. And of course, nobody wants to say no to that. And they're really excited about it. So it almost becomes a de facto done. Yes, we are going to be innovating. And
plus, who's going to say no to that, right? Yeah. You say, oh, should we be innovating, right? Who is going to say no? Right. Which CEO will say, no, we don't want to innovate?
So that's the way things work. And everybody has good intentions. The problem is when in the implementation and doing it is where the difference, that the way we look at it is the difference between a project mindset and an experiment mindset. We tend to, for the most part, break down work and organize it in projects. Projects are necessary. You have to get work done, like specific pieces of work done by projects. But a project is incomplete from a business standpoint. An experiment is a business venture, and we are doing business ventures. And if we think too much about projects, we tend to forget about the business impact. And that's what we work with. A lot of people, like, the software that we've started in our, lab, and, the consulting that we do to bring people up to speed is really changing that mindset that everything is an experiment unless you've already done exact same thing before and you're doing the same thing. So then it's not a question, it's not an experiment anymore. You built one house and you're a builder and you're going to do 100 more. That's not an experiment anymore. That's,
Right.
you know, that's a project, right? That's not a, you know, unless something, you know, like an earthquake happens and that's completely out of your control. But bottom line is most everything else we do, especially in innovation and growth and competitive landscapes, is innovation, is doing things differently, is improving things and coming up. And those are all experiments. Think about them as experiments from the beginning, set the expectations, set the measurement levers up front, and make it easy to, when the thing goes live, to start tracking and automating. Because that's the other part of it, is that, you know, there are delays in how fast we experiment, right? So if you look at all the different parts, there's so many delays, and this just slows things down to a point where you do an experiment a year. You know, that's very slow. So that's the other part of it.
Yeah, I mean, a year, exactly. And it's, especially if you go into an experiment with the idea that you will be iterating, right? That it's not just a single experiment in the sense that, oh, if it's, you know, a binary outcome, like, yes, we get it right, no, we fail. It might be, you know, you succeed, but then you start, and of course there's a difference between experimenting and optimizing, right? So, but it's not necessarily a purely binary outcome, I guess, you know, and that's the difficult part. Also, if your lag time is a year to get to a failure or a success decision point, or not necessarily a decision point, but get data back into your system, how would you iterate? I mean, is it going to be a 10-year iteration?
Right.
So yeah, I think that, to your point, that's a very valuable thing. And the project and experiment distinction is a good one. I hadn't actually come across that before, but it's a very good way of putting it.
Our life is all projects. I just found that we get things done, but it's just so painful. There is a massive amount of experimentation being done in corporations on the business side, even in the same companies. So let's say you have an e-commerce company. They completely know what's going on under web experiments, right?
Yep.
But you talk to the CEO as far as their own overall experiments, and they don't think about it that way. They think experiments are only for the website and the features that we add, and, you know, the products that we're testing.
And the word that you might hear a lot of times from up high in a corporation is like initiative, as opposed to experiment. And I wish you heard experiment more. I think initiative, it gives it the sense that it can't fail, or it's not allowed to fail.
Right.
Especially if the CEO is saying, you know, oh, we have a new, let's say it's an offline company and they have a new e-commerce initiative or something. Maybe e-commerce is not the right channel for that company. But when you say e-commerce initiative, I mean, it basically makes us seem like, no, this is what we're doing regardless, you know, regardless of what happens. This is a new thing that we're doing.
It is going to work.
It is going to work. Yeah. And that's the thing too, is that message permeates down through the organization. Nobody necessarily is saying it can't fail. Nobody, the CEO has not said, oh, it can't fail. But that's the message that's being sent. And it's also a cultural thing. During my time at Este Lauder, I think they went through a bit of a shift with this. Kind of like the old style of the company. So some of the folks who've been there for maybe 30 years or around that length of time, 20, 30 years, they had this impression that, oh, you know, you cannot be attached to a project that fails. Right. And if you are, it's kind of your name is now tarnished. Whereas I think and of course this is a cultural shift. So, you know, the CEO had just come in only a couple years before, and it's a longer term type of shift as opposed to something that happens overnight. But what they were really trying to push was, you know, the outcome of these initiatives or projects or experiments. And if they did not use the word experiment, but in hindsight now, from how you described it, I wish they had. We use the word project most often.
Right.
And I think experiment makes it much more clear what actually is being done there. It's much more clear to both sides and everybody who's working on it that, you know, this is not something like, if a project fails, that is a big deal. But if an experiment, you know, you falsify the hypothesis, that's no problem. I mean, that's part of what the objective was to see if you can falsify it.
Yeah, and I mean, and some things just need to be iterated. Eventually, they might work.
Right.
But if you think about a very definite set for the success of a project, you're impacting the whole team when you don't need it in the time.
Right.
Whereas, that you get discouraged, it just can cause budget issues. It goes up and down the organization. Whereas if you say this is an experiment and this is how we're going to measure it, and this is the frequency of evaluation, then it just, it becomes a lot more smooth. And eventually you have to have some guidelines as to what is failure and what is success ahead of time, not after the fact. So this is what we do in projects, is we set the guidelines after the fact. Let's see how this does, and then we'll decide if it's a success or failure, because it's a new thing and we haven't done it before. Right. So the experiment is different. Now, it doesn't mean those things can't change, but we're going to push you. And this is like, this is what I love about Jeff Bezos. I have a lot of, respect for him. He keeps talking about experiments. He looks at the whole Amazon as an experiment. He keeps saying, we can die. We will die. We will, it's just, he keeps, and I don't see many other CEOs having that kind of a conviction, or maybe even brevity, to come out and to the public, to the Wall Street, say, it's an experiment.
Yeah.
Get it. This is it.
Well, and that brings up a point I was just gonna say, is that, I think the importance of continuing these experiments is incredibly useful, because, market conditions change. In my opinion, right, an experiment is a way to sort of test the underlying, the word I use, which might be a little too abstract, is topography of the market, right? And I think that that's always changing. There's a blog post I wrote like several years back, and it's called "Fix Your Map, Not Change the Terrain." Right. So it's like, I think a lot of times, and one of the examples I brought up in there was like this, the history of like ADHD medicine. So it's interesting that, and there's some articles I cited in there. I'm happy to send you the blog post so you can put it in the notes. So people, if someone really wants to go deep into this, there's some stuff there. But
I have ADD, so definitely send it to me.
No, so one of the things was that there's actually a dispute between many doctors actually on the nature of it, right? So some doctors say that obviously there are people with a true medical condition, but the vast majority of people who are getting children, especially, who are getting the medicine, may actually fall within the realm of normal behavior. But are just like maybe a little further norm from what the school system would like, let's say.
Right.
And so this idea is that what this medicine is attempting to do is actually change what the norm behavior is, as opposed to maybe adjusting to, this is the terrain, right? So their map and terrain is different.
Okay.
What the children actually are is different from what they want the children to be. And so they're trying to change the children. Whereas
that's a good point.
Right. So instead of, and not saying that's like the wrong thing to do. Maybe for society, that is the right thing to do. Who knows? Like, that's above my pay grade. But my point is, like, from a company perspective, let's say, right? What Bezos is saying right now, buying online, buying through Amazon's interface, that is a very convenient way to do things. What he's saying is, who knows? Maybe something will be totally different and change that Amazon cannot predict. And in that case, the experiment will fail. And so what he's saying is that we are open, and by naming it an experiment, it means that they are open to iterating on that, or falsifying this hypothesis and testing a different one. And you can see that they do that, right? With like Alexa and all the other things that they're involved in. They are very open to their current model failing.
To be wrong. Right? They're open to be wrong.
To be wrong. Yes. Yeah. And the exact opposite of that, right, is actually how their most of their retail competition has behaved in this. That basically they get more defensive, and they want to entrench their business model as long as possible without changing that. And maybe now, as kind of the writing comes on the wall, and that they're more open to changing. But for the longest, it's not like e-commerce is a new thing, right? It's been going on for a long time. Right. And it's also not like physical retail is dead. I think it's just a certain form of physical retail that is struggling a lot. And that form, it's not a new problem. It's been going on for a long, like many years now.
Right.
And if let's say I'm going to use like Macy's as an example, uh, Macy's, if they had sort of been willing to falsify the department store model, or at least be open to that as an experiment. Imagine if 60 years ago Macy's was saying, "Oh, the department store is an experiment," right? And they maintained that throughout the time of, Amazon is still a younger company than Macy's. Uh, who knows after Bezos, right? Like if the next CEO will also treat it the same way. But you would hope that they
Right.
do, and then as the models change, the one that is more open to experimentation can adapt much faster to the changing terrain, right? Going back to the map and terrain
Right.
metaphor.
Right. Yeah, the
So
bottom
yeah,
line is that the more experiments you do, the better chance of actually staying competitive and winning a market,
right.
and the faster you do these experiments. So
Yeah,
there's two key things. If you do experiments and each one takes a massive amount of resources and time, you need a lot of people. You need thousands of people to do these things. So
yeah,
there's two variables that we have to constantly work on: is how fast do we do them, and how many do we do, and then
mm,
how what's the cadence of listening and looking at the results and adapting.
right. And I guess how can you
Yeah.
build? So let's say you have a very successful experiment. How can you? What's the next iteration of that, and how can you kind of double down on what's working?
Right.
Because a lot of these things are, as I'm sure you've come across in your career many times, a lot of these things are subject to power law,
Mhm.
as opposed to like normal distribution. So if you are correct, like think about AWS, right? That started as an experiment, but then Amazon did a very good job kind of turning that into a massive business relatively quickly.
Right.
Uh, Whereas if they kind of stayed slow in their cadence, like, oh, okay, this looks interesting. Maybe we'll put 10 people on it, 20 people on it, or $20 million, $5 million. Like if
Right.
it was a small investment, um, it would not have grown to the level it has, and perhaps another player would have sort of leapfrogged them in the market by now. But I think, as you said, it's the willingness to experiment, but then what happens next,
Right.
depending on the result. Yeah,
Right.
is
Well,
very
I mean,
important.
the world is changing so fast. Even if you're successful, it doesn't mean tomorrow. So that's the other part of
Mm,
what
yeah.
Bezos keeps saying is the day one concept.
Ah, yes.
Is every day is day one. You have to prove yourself every day to the customers. It doesn't matter if you gave them a good experience yesterday. Like a
Yep.
restaurant. If I go there and I have a good meal today, that doesn't mean tomorrow they can give me a bad meal and I'll still be happy.
Right.
Right? Every day is a new day,
Yep.
and
No,
that's why. Yeah,
I always think about it like sports too, and like
exactly.
every sport you've seen, some player is great until the day that they're not. And then it
Right.
doesn't matter all the past records and championships and everything that they've won, then nobody cares after that.
They're
I
gonna
mean,
replace them. Yeah.
they're going to replace them, right? Exactly. They may care. They may say, "Oh, this guy was once so great or so good," but
They'll put them in the
no,
Hall of Fame and say,
yes,
just go on the wall,
yes, yeah, they
enjoy
won't
the
want you
wall.
on the field or on the court anymore.
Yeah.
So it's just like that. I mean, I think, and sports is a ruthless environment in a very similar way to business, in that every team wants to win. I mean, I would argue actually sports is more ruthless than business, because I think business business you're often creating wealth, or you're creating new markets, or you're finding these things. Whereas sports, I mean, only one football team can win the Super Bowl, right?
Right.
It doesn't matter how many good teams there are; they can only win. There's only one winner. So it's like, there's no creation. It's like winner take all type of thing.
Sports
And
is a really
business,
good analogy. It's a good sport because the cadence is also like really fast. Like,
yeah,
you lose a game this week, by next week, you need to have something changed and tested, or you're going to lose again.
yeah. And even sometimes when you win, uh, you might win this week, but in the whole next week, the other teams have all a chance to figure out what you
Yeah.
did to win.
Yeah.
So they can also kind of your tactics that work one week may not work the next week.
It's
So
a
you
really
need to be
good
part of that
example
program.
of fast experimentation.
Yeah,
It's a very good example. Yeah.
and the need to keep adapting and changing as
Right.
necessary also.
Right.
Yeah, and it's also very, I mean, you're totally right. Sports is a great place to look. I mean, you see even in like it's amazing how the narratives are always like one step behind the actual innovators in the space,
Hmm.
right? So like for example, as of like last year, right? Last year was in football, Patriots and Rams in the Super Bowl. And up until that Super Bowl, everybody was saying that, oh, future of the NFL is all passing, and it's going to be like, you know, each quarterback's getting 400 yards a game, and, you know, defense is kind of like not that important. I mean, it's important, but obviously it's only important as much as you can stop the other team's passing.
Mm-hmm.
Now, that Super Bowl is one of the lowest scoring of all time because the Patriots basically took away the passing game for the Rams, and it made it a slugfest.
They changed the game.
They changed the game. But then this season, because of that, other teams have also figured that out. And if you look, the quarterback numbers are not like they were last year, much lower. And also now there's the next level of innovation, this quarterback on the Ravens who can run and pass like extremely well. So he's like both a running back and a quarterback. And now watch, this whole year, everyone's going to talk about that. Next year, people will have adapted by then. At the very latest, if not this year, they will adapt.
Yeah, the scouts already are looking for quarterbacks that can run and pass.
Yeah, and the defenses are already trying to figure out how do we have to change to stop this, right? I think it's like, because it's a whole different formation, different weapons, but there's also probably new weaknesses that were not there before also. So it's exactly what you said. It's very quick iterations because it's 1 week to the next. Whereas I think business tends to be maybe more quarter to quarter, or I mean, it shouldn't be, right? It should be quicker, but the cadence where you get to review the results, especially for large companies. The public doesn't really review the results except for every quarter when they do the quarterly reports.
Right. So that's the challenge.
Can be obscured. And even that can be obscured, right? So the true results may take years to show, or really kind of almost the omission of true experiments can take longer to show up in those reports.
Right.
Yeah. Because everybody, as you said, every CEO or everybody in their annual report can say, oh, we have an innovation department. But it is hard to figure out from the outside who is truly experimenting versus doing it as lip service.
Well, the measurement, I mean, we have to be able to measure. I mean, innovation is such a big word.
Yes.
And how do you measure it? Okay, so I'm innovative. Well, I'm more innovative than you. Well, no, how do you prove it?
Right.
So we need to come up with ways, public ways, to actually, I think there are institutes that do grading of people on innovation, and I think one of them just came out. I forget the name of the I think it's the Drucker Institute. I think that ranked Amazon as #1. And you look at the top 10, there are all these huge companies, and when you look at the criteria and how they evaluate things, it's like evaluating governments. A government is so, like the numbers are so vague and so slow. I don't think that's a really good gauge on corporate innovation. And we're just, our expectations are not high enough. That's why Amazon is able to out-innovate other people, or other, I mean, Amazon is not the only company. Just because, I don't want to say Amazon and Bezos are the only ones. He's just more vocal about it, and that's what I like about it, because he brings the topic up for people to talk about.
Yeah.
So yeah, I mean how do you measure innovation? So let's say, for example, let's dig into that a little bit. How should we measure innovation, really, in an agile world?
Yeah. Well, I think it is different from a company to company basis as well, right? So there are, there are like positive metrics, and then there are like negative metrics. And like the negative metrics, for example, are extremely hard to measure, because let's say, going back to this map and terrain example, if the terrain is kind of like shifting underneath you, so the market is moving away from what you do as a let's say as a large company, and as a experiment, you launch some initiative that basically helps you. I'm just going to bring up the example of like department stores, for example, right? I mean, and this is a hypothetical example, but I'm sure it's rooted in some measure to reality. Foot traffic in those malls has been declining for quite a while. Now, let's say somebody comes up with an experiment that actually brings in foot traffic to that store, and it's working pretty well. So the success may actually just be staying in the same place. Like, oh, year to year, our foot traffic did not drop, whereas other stores dropped, right? So it might be relative to your peers, And I would say that's in an environment where you're doing something that already exists. It's an experiment with some trackable metrics that already exist. However, where things get more tricky is if you're doing something that's like a new business model or something new that just has not existed before. And in that case too, your metrics are probably going to have to be more customized to what you're doing, because there's no sort of peer, there's no sort of like comparison point. You know, you can't say, oh, like this, this new marketplace idea that we're doing for, let's say, for example, there's no one-to-one comparison. So you may just have to set your own metrics for success. That could be based on revenue. I mean, my opinion is I like it most when it's based on real dollars that are being brought in. People are voting with their wallets.
Right.
I think that's a great measure for success or failure. Even if people are telling you, let's say in surveys, they like something, but if they're not parting with any cash, it's hard to know whether to believe what the survey results say. At the same time, you know, other industries, it might be different from dollars. Maybe you can't get to dollars that fast. So maybe it has to be based on engagement rate or on, you know, like let's say Facebook is trying some new feature. It's going to have to be probably not based on dollars, because advertisers in their industry, advertisers usually come after the users are already there and using something. So I think just basically what I'm trying to say is this, metrics is almost, if you're doing something truly new, you have to customize it based on that specific initiative. I prefer dollars. I mean, if you can do dollars, that's the best, but it might be something else like users or engagement or something else.
Okay. Yeah. So here's a rule that I have, and I try to implement this. You know, of course, everything we do is an experiment in and of itself, and it's a, you know, it's a continuous. But we're not gonna, in our own company, we're not gonna do anything that has some level of importance or significance unless we can tie 3 metrics to it to measure upfront.
Okay.
So I don't care how nice it sounds, how good it sounds, who came up with the idea, I came up with it, my partner, anybody. If we can't tie 3 metrics to it to measure upfront, we don't have the permission to start that project.
And the 3 metrics, do they change or are they always the same?
No, they're changed. It depends on the experiment.
You basically, so you're saying it needs to be measurable, is what you're saying.
Yeah, beforehand. Yes. You have to think about the measurement before you start.
Yeah. Yep.
Right. Otherwise, you're not ready. You may have the features, you may have the UI and the CX and everything, but from a business standpoint, you're not ready to start.
Right. No, that makes actually a lot of sense. That the metrics may change, but you need to know what those metrics are.
Right. And that should be
for that particular experiment.
Right. Yeah, that should be a part of the planning. Yeah, it should be part of the planning of the whole thing is, okay, now we're going to talk about measuring and then determining what's the level of success.
Yep.
So if you do something and it increases whatever, it makes an improvement in the right direction, how much is enough for you to say this is good? How much is a flag? And then what happens if things are not going the right direction? Do we change? And because if you don't do that, then you can't automate it, because we need to automate that process. The measurement process and the notification process needs to be automated. Otherwise, again, we will become very slow. They're going to have all this friction in doing the experiment, measuring it, communicating. You know, as product managers spend a lot of their time, and project managers and product managers spend a lot of their time just capturing data from these different systems to bring together and then say, oh, okay, based on this, we should not do this. So there's a ton of manual work involved that needs to be automated. Yeah.
Well, and then the more friction there is, the slower your iterations are, and also the less likely that the experiment will be put to proper use.
Right.
Now, when you mentioned that also, do you have a system for like cataloging these experiments over time? So you are able to refer back. Let's say somebody comes up with an idea somebody else came up with 3 years ago. You can easily pull up these, this is what we did and why we did it that way.
So we're a startup studio. So we build different products. Our newest product is called Experimentation. we call it the Terminator for experiments. And it's designed exactly to do that.
Okay.
It's to help companies actually start from the ideation phase, take ideas, evaluate them, and then create experiments. Design the experiment right there, including the metrics and everything up front, and then integrate with the data sources so that when the experiment starts, the data will start to come in automatically and show and notify the team and let the team know how their experiments are doing without spending half of their time trying to capture this data every single day and still not be able to. So that's exactly what our goal is to do with this new software.
That makes a lot of sense. Yeah.
So,
and companies, I guess, would use that, because here's the other thing is that I've noticed, and this was part of the culture shift at both at Este Lauder, but also I've seen at other companies as well since then. There is definitely this mindset that is trying, people are trying to get away from, of if it didn't work when we tried that 10 years ago, it's not going to work today. Because that is not necessarily because market conditions can change, enabling technologies can change, your company has changed obviously in 10 years, right? So there's a lot of differences. Something that, let's say a company tried drone delivery today, just making it up, right? Drone delivery today may or may not work, but I would imagine over the course of 5, 10, 20 years, things may be very different. And maybe the conditions are better suited at that time, or just my point is, just because an experiment fails at a certain point in time doesn't always mean that concept, doesn't have merit, or that the experiment couldn't be run a different way, or maybe with a small change or something that may enable it to work better.
Right.
Yeah.
There's so many variables that you have to look at. So drone delivery maybe will not work in LA, downtown LA, but it may work in, I don't know, Santa Monica or whatever, in Santa Barbara.
Yeah.
So you have to look at these variables, and that's how you do experiments. And you look at, if it didn't succeed in LA, do we just scrap the whole thing? Or do we actually look at the opposite of, like, maybe it works? So like in China, actually, Alibaba does a lot of drone delivery in the rural areas. That's where they do a lot of their deliveries using drones, but not in the big cities yet.
Right.
So,
because it's more complicated in those locations. I mean, an example from my Este Lauder time is I was working on a project, this was truly a project, not an experiment, with involving customization of lipstick. And the interesting thing was, in the past, and they still have this brand, but it's a much smaller brand than it was in the past, called Prescriptives. So Este Lauder owned this brand, and basically this brand, in my opinion, was like 20 years ahead of its time. They basically were doing in malls customized products.
Okay.
The products were made by hand, and somebody would go in, so a customer would go into the store, they would basically do a diagnostic on you, right, way ahead of its time, because there's no machinery involved. It was like a professional looking at your skin and saying, oh, this product will work well, and then they would make the product for you right there. Now that brand, I think, it didn't completely fail. I think it still does like 10 million or so a year in profit. So it's not like a tiny, for a company of Este Lauder size, it's a tiny brand, but 10 million profit a year is not terrible. But it was all manual, right? So all the process was manual. And so when this customization and work was initially being proposed, this was a big pushback from a lot of people who have been at Este Lauder for a long time, as they said, oh, we did customization with prescriptives and it didn't work. And the thing is, this variable of, okay, is it manual or automated customization? Is it at a mall, or is it at home off of your smartphone type of customization, right? These are variables that I think, yes, they're both customization, but they're very different. One experiment is not testing the same thing as the other experiment. And so, I think perhaps it's in your software, but this ability to make explicit what these variables are, I think aids the discussion a lot, because it's very easy to lump those two things in the same category. They're both customization, that's true, but the actual variables are quite different from each other. And they're certainly not testing the same thing. So I think a software like that would, I think, be very useful if a company starts thinking from a perspective of experiments.
Right. Yeah. So, I mean, that's basically our goal, is to help people really think in terms of experience, because like I said, we are trained to think in a project mindset, and that mindset needs to change. Not that projects are bad, projects are necessary, but the goal should be looked at as an experiment. And once we get to that point, then we need the right tools to do it. Because you can also say, you know what, I'm going to run fast. I'm going to do things, and I accept, I agree. But if you don't have good shoes, if you don't have a good, like trainer or something, you're not going to do it. So that's where, after accepting and understanding what needs to be done, then you need to have the right tools that will help your team actually, get faster. So that's basically what our goal is.
Well, and a lot of this is a broader cultural shift, right? It's not just even in a specific company, because if you think about it, Bezos is the founder of his company. And I think this is also the advantage a lot of founders have in the experimentation is yes, they may have investors, they may have a board, they may have other stakeholders, but at the end of the day, they are usually, they have the ability to run these things, and they kind of have cultural control on the company. Whereas in a lot of like legacy organizations, the CEO is not the founder. They don't even own a significant stake in the company. They might own, less than 1%. And really they work for the board and the larger investors. And so this is what I mean by broader shift, right? I think this experimentation concept and things like this podcast, right, I think are useful in expanding the number of people who actually think in terms of experiments, because that is not necessarily the prevailing thought process today. And I think that needs to be thought of by even retail investors, needs to be thought of by hedge funds, needs to be thought of by mutual funds, and those individuals who are on the boards of these large sort of legacy companies. They also need to be able to tolerate that an experiment could work or not work. And I think it's more of a cultural shift as opposed to a even if, let's say, a CEO came into one of these legacy companies with this experimental thought process, there's no guarantee that the first 5 experiments will work. They all fail. The board, if they're not thinking in this same mindset, they may say, "Oh, this guy is a failure. Let's get him out of here." Right. And so I think it's a broader shift in thinking, and it needs to sort of permeate companies, business schools. Like, it needs to go all across society. I think needs to understand this a little more deeply. Right.
Well, I mean, it's the size of the experiment too. Like, if you're betting the whole company on one experiment,
right, that's a big thing
that
as
could
well.
be so that's the other thing, is that you try to start small and and a very contained unit,
failure.
right,
so
and
the
then
cost
improve.
Of failure is very low.
Right. So this is, I think a good example you probably know is that, like, when Ron Johnson left Apple and took the helm at Kmart, right, I think, and he wanted to change.
Or I think it was JCPenney.
Or JCPenney. Okay.
JCPenney. Yeah.
And he had the right idea. He knew what needed to be done, but I think, again, he's much smarter than I am. I don't want to, project into what he was thinking, but from the outside, it seemed like, the promises and the expectations were so high from the beginning in a short amount of time.
Right.
And the board just, could not go on like that. So, but if they had continued, imagine that was like 6-7 years ago, I think this happened. If they had continued, JCPenney could be a much different company now.
Absolutely. Yeah. That makes a lot of sense. Yeah. It's, and I also think some of it too is, as a society, we do have this like visionary worship.
Right. Yeah.
Of
we like heroes.
Individuals sometimes, right? Like, we want like that visionary to come in. Yes. Right. We want the hero, the visionary to come in with their idea, and it's 100% correct.
Right.
And we just want to follow them. Right. That's like, that I think that's like the opposite in many cases of the experimentation approach, because exactly what you said in your company, how you need 3 metrics, right, against anything, whether you propose the idea or it's your like most entry-level person who proposes the idea.
Right.
It shouldn't matter. And that was actually one initiative we were moderately successful in getting going at Este Lauder, was allowing innovation to kind of permeate from any level of the organization. It was not done, I think, as precisely as I would have liked. However, there was the ability for, you know, an entry-level chemist to make a suggestion, or an entry-level retail worker to make a suggestion, and even lead a project or be involved in a project that was of their creation. The idea being those sort of on the ground individuals have a better sense of what's actually happening on the ground than somebody sitting in a conference room somewhere.
Right.
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 And so the idea was that they are more in touch with what the market actually is doing, or what the problems are on the ground. And so, you know, kind of made like an internal accelerator almost.
Right.
You know, is what, if you want to call it. I mean, it wasn't, in my opinion, we could do, especially after this conversation, the better job could be assigning metrics for success, as opposed to in that group, the way that success was measured is at the end of a certain period of time, I believe like 6 months, they had to work on it. They would pitch it to a board of like the CTO, the CEO, and then certain like relevant SVPs. And then they would basically decide whether to fund the project further or not. So it wasn't metric based. It was more like based on how those individuals.
Right. So that would be
Almost like, you know, like a Shark Tank type of thing almost, as opposed
right.
to as opposed to a metric driven. So I would prefer to do a metric driven, but that's maybe the next iteration of that experiment.
It is a culture change, and cultures do change, but they're hard to change. But I think most people are genuinely looking to improve their experience in life.
Yeah.
And, you know, we don't like to see projects fail so much. It's not good. It's not good for the morale of the people, the team, nobody. So I think that's where I think the incentive is there. When I talk to people, everybody agrees. The challenge people have is that how. You know, it's not really the what. Everybody, just like innovation is good, we need to innovate. They agree. The question is how, and that's where a lot of these initiatives, good ideas, actually go to die. And that's our work, is to how to help with that, and, you know, make some progress. And, you know, the other thing is looking at things from the bottom up. So I believe that the top leadership in a company definitely need to believe in the idea of experimentation. But I think there is also the possibility of the working, the actual units, the working units, to also impact change and push it up. And the way they can show it is by trying to identify things that they can actually control to a certain level, and show how using an experiment actually helped generate revenues or things over time, with accountability and transparency. So the other part is that we need to communicate and share the information really quickly, as quickly as possible, with people, so everybody knows what's happening. Right. When people don't know what's happening, we take too long to make decisions, and that's where, you know, it becomes costly. So that's the other part that we're also like looking at right now, is that how do we bring in this change from both sides, not just from the top, but from both sides.
Yeah, and that goes back to the whole cultural aspect of it too.
Yeah.
Is that then when you have the top down and bottom up, then it sort of permeates through the culture a little bit better, and everybody is on the same page, right? Because it's one thing for the CEO to be a believer in experiment, and, you know, let's say Bezos, right? He has complete job security at Amazon.
Right.
It's another thing for somebody to think that their job depends on the success or failure of a project, as opposed to treating it like an experiment, right? And people also learn from actions that they see in the company. So, you know, everybody can be saying the right things, but it also has to be followed up with, you know, if somebody doesn't lose their position because the experiment failed, right? And as you said, it's not, nobody likes to see the failure, but I think the failures get you closer in many senses to the success. That's the goal. And I want to just real quickly go back to one thing you said like a minute ago. Like you said, everybody like agrees that this is the right thing, and it's just like with innovation, everybody agrees it's the right thing. So it's one of those situations with like, we are here, we want to get here. As you said, the question is, how do you get from here to here? And many times the path to that is not clear. Right. And your JCPenney example was a great one, because I think they wanted to get here, they were here, but along the way they went here in the journey to get up to here, and they just when they hit this point, then the board couldn't tolerate it anymore.
Right.
And yeah, and I don't know what the solution to that is in every company. I mean, I keep going back to culture and understanding about this, which ultimately is probably the only way to get there. But the individual companies, maybe it's about setting expectations early on in the process. You know, if maybe when he joined, if it was very clear that, okay, this is going to be a 5-year process, it's, you know, there's a possibility we're going to be really down in year 3, but if we don't see it through to year 5, we're not going to get to where we want to get to.
And it's possible that they did. Yeah. And it's possible that they did have that, but market changes, conditions changed. The stock went down for
and being a
reason.
public company,
right.
And being a public company also exposes you to activist investors, and
right.
You know, maybe there were other pressures we were not aware of, right?
Right.
That were going on in that boardroom.
Because I'm sure, you know, building even the Apple Store concept was not just a done deal from the front. I'm sure they did thousands of experiments. So I mean, Ron knows this better than me, definitely. So I'm you know, it's just that, you know, the way that the especially the public corporations are created and run is not really conducive to experimentation and innovation. Yes, the talking about it, the lip service is there, right?
Yeah.
And I mean, you know, good or bad connotation, I don't know, but it is there. But nobody has a tolerance to fail. Nobody wants their stock to go down. That's what, you know, so.
Well, a lot of times compensation is based on that for a lot of the executives, right? Compensation may be based on stock price going up because it's option based. And you're right, that you have to have the tolerance for it to go down as well.
Right.
You know, the one place I have noticed there is more tolerance is when you're speaking about innovation versus known competitive threats. Right, I noticed that there's more market tolerance to that. However, not every threat is known, and not every opportunity is against an existing threat. Maybe there's just a white space you want to go into, and you need to run experiments to get into that white space. But I've noticed the market does react well when somebody is trying to combat like a known threat. Like, for example, if every time Walmart releases good e-commerce numbers, the stock goes well up. Off of that, because it's such a known thing. Like, everybody is thinking, oh, Walmart is going to be destroyed by e-commerce, and whenever they release, oh, actually our e-commerce is doing quite well, that helps their stuff because it's a known threat. I think the problem especially comes when it's a new space, like a white space type of innovation, or it's a threat that is not yet necessarily acknowledged publicly or well known publicly.
Right. And
then it might be viewed as like, oh, especially if it wasn't a successful experiment, this is a waste or failure, you know? Yeah.
Right. Yeah. I mean, that's the other really art of detecting new opportunities where you're already doing good and you detect from the consumer shifts and how consumer behavior is shifting, and that's why there is a need always for corporations to work with startups.
Right.
Because no matter how innovative and fast a corporation gets, they have very limited resources.
Right.
So that's where startups actually are such a key part of, you know, helping that with, you know, to the corporations. So I know, so we're getting close to the time. What I want to do before we close is I want to ask you some specific things about startups actually trying to work with corporations. So let's say you have a startup and they want to work with a corporation, you know, corporate unit. What are some of the things that they need to do, maybe also refer to the book, that will actually help them, you know, open the doors faster?
So I think the biggest one is identify the person who in the organization who feels your problem. And it could be multiple people, but really picking the right person. I can't tell you how many times I've seen or even worked with startups who say, oh, you know, we're already talking to somebody at Ford or at, you know, Este Lauder or at Sephora or whatever company they're trying to work with.
Right.
there are so many people who say that, oh, we're already talking to somebody, but who is that somebody that you're talking to? Is it the person who faces your problem, or is it just somebody who says, oh, I know about that problem in the company? Because the thing is, it's just like any human being, really. We're going to buy something to solve a specific need or a want, right? It's not going to be like, if I don't use makeup, right? I'm not going to buy makeup just because I know other people buy makeup, like, necessarily. That's not enough motivation for me to use it. I would want to buy it for a specific need for myself, right? So in the same way, like, if you're selling to somebody at, like, just use Este Lauder as a good example. Let's say you sell something that improves the e-commerce conversion rate, right? There is a very specific person in the company who that's their whole job. They need to improve the e-commerce conversion rate on the website. They need to improve they want to improve sales on the website or checkout percentage. I mean, that's somebody's exact job. You reach that person, it's not going to be that hard to sell them on what you're doing. Because if you find that person, it's of course your product has to do what you're claiming that it does, and you have to convince them to do that.
Right.
But that's the biggest mistake I see, is that people are just talking to the wrong person. You're never going to close the sale if you're talking to the wrong person.
So how do you find out if the person is the right person or the wrong person?
I think you have to be very clear when you're speaking with them about, you have to ask them. And there's a second question that I think people also need to ask, and that's about budget. Right. I think there's also certain times when probably the second most common mistake that you see is that someone is pitching somebody in the company, and maybe that person agrees that this is a big problem and it will help me, but I may not have the budget for myself to be able to do that. I may need to ask my boss. So you, as the person selling to me, I'm letting you know when I say that, hey, I'm not actually the decision maker, that we'll need to do a next step meeting, talk to maybe between us three, me, you, and my manager. And now you're going to have to convince her or him about the value of what you're doing and how you're going to help that person. Right. So of course, obviously the size of the sale impacts.
Right.
Certain things are small enough budget items that I can just make the decision myself. But I think you have to very explicitly ask, right, if about this person and what are they judged on? What is their success based on? Some of it can be determined by title, but not always.
Right.
So it's hard, and I do think it's a bit like navigating a maze in a lot of cases.
Right.
You're going to speak to maybe 20 people, and maybe 19 of them are the wrong person, but maybe the 20th person is the right one.
Do you need to have experience in enterprise sales to actually be able to get a startup into an enterprise?
I don't think you need to have, I think you can build the experience as a founder. It's not rocket science at the end of the day. I think, being a software developer is much harder than this, but you have to be willing to do it. And I think you also have to be willing to put yourself out there that, you will probably not close many of these sales, but that's okay. And also that probably the third thing, which is very important, is also understanding the timeline. When you're selling to a small business, they can probably make a decision very quickly.
Right.
That may be the decision cycle that you're used to, but when you're working with a larger company, it's not that uncommon for it to take 6 months, 9 months. It's not even if everything is going smoothly, you're talking to the right person, you're pitching it rightly, you are solving a problem for them, it's not going to be, usually, you can get lucky and it can happen quickly,
Right.
but you shouldn't plan for that.
Don't count on it.
Yes, don't plan to be lucky.
Right.
If you get lucky, it's great. But I have seen that where people will put in their projections, it'll say, oh, okay, we're going to start enterprise sales in January, and by June, it shows 500K revenue. And I'm like, okay, that'll be great if that happens. But
that's a good goal.
That's a good goal, but we should not our fundraising strategy based on that.
Right.
That if we don't close 500K of sales by June and we're starting in January, that we're going to run out of cash. That would be a bad situation. So yeah, basically I always tell people, don't plan to be lucky. Just if you get lucky, it's great, but don't make that part of your business plan.
Right.
So understanding the timelines for first timers is also I think a new thing to notice about
and
the
probably
sales
building
process.
Relationships with people
Takes time
over time. Right. Don't
Yeah,
expect to just jump in and everybody will be ready for you.
Right. And I think the other thing that it's easy to forget on the startup side is that there is a lot more to risk at the large company than at the startup, for example, right? At the startup, you're kind of going, this is in the book for sure, that, you know, I elaborate on this, but in the startup, you're kind of going from nothing to creating something. So it's all upside. Like it's all about creating. In a larger business, there is existing territory that they've already kind of captured, and they don't want to lose that. And they don't want to hurt themselves by associating with you also, right? So basically what I'm saying is, let's say you make a point of sale software or something.
Right.
Don't expect them and do not ask them to go implement this in 2,000 stores tomorrow, right? Off of a first meeting. They're going to want to do a pilot. They're going to want, you know, there's going to be steps in the process. It's not going to be an instant kind of turnaround where, oh yes, we're going to change our point of sale software tomorrow for you because it's what you're pitching is so good. What you're pitching might be so good, but they're also thinking about the risk, not just the upside.
Right.
They're thinking about where can this go wrong.
I really appreciate the time that you gave me. I learned a lot, and you know, wish you the best in, you know, what you're starting a new, I guess, venture next year. Correct?
Yeah, that's in the same area that I've been talking about this whole time,
Right.
but basically around some of the white space innovation for larger companies, and then for startups also some of the same things that are in the book, but basically how do they get better deals with the large companies that they're working with.
Right. Helping people with the how.
Yeah, exactly. That's exactly. Maybe you have a good way of putting things.
All right. Well,
Yeah,
thank you so much.
Yeah, this was fun. Thanks for having me on.